Hello friends, good week, how are you? Vladimir here, and this is the weekly review for the first week of April 2012. First of all, happy 1st of April for everyone. I'm not about to use jokes on this day about the market, although I wanted. I just don't want to make you confused. So I wish you just happy, funny day. Uh, Pay attention, friends, that this weekend we will have the Easter, and that's why since Thursday, the end of Thursday, during Friday, and through the weekend, and next Monday, the market will be with extremely low volumes. Pay attention for that. Do not take any adventures on these days. And let's see what kind of opportunities we might have until these days, until the holiday. Well, I would like to start with the dollar yen pair. Interesting thing happened during this week. Finally, we got the down move. It was playing around this flag and bam, down move to this important support area 82. There is a rule for divergences, right? And the rule is that the divergence will go for support number 3 after a break. As for now, did not happen. It was even far away. It's actually support number 2 after holding this support of the last two highs. 1, 2. So actually the price still has to go for support number 3 around 80.50 or little even below. But is that the time to go now, or is that about to go up first for the next divergence, right? For the next divergence to be created. No idea. As for now, no idea. But clear things should happen. A break below this 82 and hold below 82. 81.80, that's the same range, just a spike range. A hold below, daily hold below this area should open the doors for the pair to go at least for 80.50, or who knows, maybe then all the way back for the spike support area around 79.50 and around the 200 moving average. But for a bullish move that could happen easily, we should have a break and a close below the 83.20. If it happens, the doors should be opened for a move higher, and a move higher will take us to the weekly time frame. And pay attention, we have a stiff resistances just right here around 85, a little bit higher around the 86, 87, right? And we can see that if the prices will try to go higher, we might see a bearish divergence, right, to begin to start on the weekly chart. Which means if we have a bullish push right now, then the pair will have to cover all the way back again, at least to the 20 MA of the weekly chart. So as for now, it's very flat range, right? And it's difficult to call up or down. For up, it has to break this 83.20. For down, it has to break the 82, 81.80 range. As for until it happens, nothing to do. If it goes higher, we will be watching for the next divergence to take control, right, and take the down move then. So pay attention for any news for the dollar yen. We have a clear range. Look for a break, one of them, and some is about to happen. One of these is about to happen. Very interesting next pair to watch will be the pound yen. From my point of view, extremely interesting pair. Also should play around new highs, maybe create here the next divergence before making much bigger correction down, or another visit around 127. Who knows? On the weekly chart, we can see right along the Bollinger Band. We can see overbought situation on the stochastic already. And we can see Bollinger Band's duplication almost coming. So pay attention for the next resistances, which is around 134, 34.80. It's very difficult to point an exact level for the pound yen, very volatile. The next one, and very important, is 138 and a little bit higher even. Reaching these new highs, one of them, should open the doors for the pair to make a stop, right? That's the range. To create the next divergence, right, and to make the change of the direction. Pay attention for that. I would not look for bullish move, although it could go. But with such divergences, I would not recommend to look on buys, only to look on the next possible sells. What happens if the pair does not go higher from here? Then look for a break again below this 130, which turned to be extremely strong support. That's the range. Look for a break below this area, and if it happens, look for duplication down of this channel, right? Look for duplication down, which means around to 120, 127 area approximately. Okay, that's about the pound yen, also very, very, very interesting pair. Now, what about the majors? The situation there is not less interesting. Take a look at the euro dollar. Euro dollar has difficulties to break the last resistance around 133.50. If it will make it, right, if it's a little bit even higher around 133.70 range, if it will make it finally and will break the RSI resistance, which we can clearly see here, right, if it make it, then the euro dollar can go all the way higher to 134.70 or even 135.50, right, to hold the next divergences area there. But for the down move, look for the euro dollar to break below this extremely stiff support, which turned to be extremely stiff support, 132.70. This area is also supported by a trend line. Right? So break below the trend line, break below this support, should open the doors for the euro to go lower. How much lower? For a duplication at least, which means to around below the 132 area again. Breaking above this 133.70, even 80 as for conservative area, should open the doors for the euro dollar to go higher for the previous high around 134.60-70 area, and then probably into the 200 moving average. By the way, I think if the euro will go higher, it should be the last move before a strong down move, but too early to decide. As for now, also euro dollar has a clear range which has to be broken before taking any action. Pound dollar becomes more interesting as it is trying to hold above, as you can see here, the 160 area, and it looked like sorry, the pound did it right during Friday. That's the area, sorry, just right here, these spikes, right? It looks like the pound dollar is holding above. Means as long as the pound dollar holds above it or holds above this support area, which turned to be around 150, 59, 60, 65, as long as it's above, pound dollar should take us to the next important area around 161 till 161.50 range, and that's what I would be looking to do. As long as the pound holds above this 155.60, 59.60, it should go to the 161, 161.50 range, and that's my recommendation to look for the pound dollar. Very interesting pair. Now, what about the Pacific pairs? Take a look on the Australian dollar. It looks like there is a divergence, but friends, it's very weak divergence. Actually, it's not called a divergence. A divergence should make the attempt to go higher. This pair holds negative. What could happen easily is this support area for the RSI to be broken down. If it happens, Australian dollar is on all the way down below 102.50. I think that 102.50, this support area, right, the spike support area on the previous range, should be at least the target to visit. A breaking below this area will open the doors for the pair to go to 102, then 101.70, and breaking below this, friends, open the doors for the final move to below the parity area. For an up move, I think the first attempt to go up will be only with a break above this trend line and actually channel, right? Or to buy from the lows when divergence is created and candle pattern is created. Pay attention for the Aussie dollar then. New Zealandian dollar is being traded in a zone, and trading in a zone means we cannot do anything. Nothing special happens there. Skip this pair as for now. What about the crosses with the Pacifics? I think Euro Australian and Pound Australian become very interesting to look for possible sells. For investor style, for those of you who follow the club, it's already a good idea, good area to start the attack. But for entering regular with a percentage risk, it might be still too early. I would like to explain here a little bit more. Pay attention for the last candle, daily Marubozu. It comes after a doji, which means a stop already happened. Bulls, right here, Marubozu after a doji. It means bulls already make some stops. Watching the weekly chart, we can see we still have more to go. We have stiff resistance area around the 130, right? And we have a duplication area around the same area, somewhere around above 129. Going to 4-hour chart, and we can see the divergence is there. The last area that was not tested was this area, and this area has to be tested. So my opinion is to look for opportunities to sell in between 129, the current area, to the 130, 130.50, which is below the 200 moving average. This should be considered a sale opportunity. You can go as low as the 4-hour chart, look for candle patterns there, bearish candle pattern there with the divergence, and make the sell. This should be at least the target. That's about the Euro Australian. Breaking below this area will open doors for the Euro Australian, by the way, to go all the way back to the trend line, which means it could go back to the 126. Also very interesting pair to follow. Pound Aussie is the same story, riding on the Bollinger Band. RSI aiming 80 on the daily chart. We are overbought already, right? We can see this last break is already duplicating itself. We have a stiff resistance area just right here. The pair is almost there. It should make the stop. The next important area to watch will be around the 156 with something, and this area should make the stop, and the pair should go to correct itself at least to the previous support, which still was not tested. At least breaking below this support, and the pair will go all the way back to the 20 MA, right? And breaking below that will take us all the way to the next support area, 150. The higher it goes, the better the sell area should be considered. Looking on the much longer time frame, we can see there still has more to go, right? On the weekly chart, for example. But for the daily, the short, the mid-term, it should make the stop around, make the correction. So consider to look for sell opportunities. How to look for them? Candle pattern, bearish candle pattern with the intraday divergence, 4-hour divergence, for example, with RSI over both situations, should be considered as good opportunities. Alright, Pound Canadian, also very interesting pair. We have band to band move. We have overbought already. As we know, after band to band, the pairs tend to go all the way back to the 20 at least. It could go a little bit higher, right? We have a stiff resistance area finally, which looks like being broken. The next important area to watch will be the around 161, maybe a little bit lower, right? The pair should make the stop, and a big correction of several hundred pips down at least to the 20 MA of the daily chart. Watch out this pair, very interesting. Australian Canadian, also very interesting pair. The pair hold it below this 103.60. It should keep lower, and as long as the 103.60 is holding, the pair should aim the next support 102.70, then the next area around 102, the next important area around 101.40, and breaking below that will take us also to the parity area. So I am bearish for Aussie Canadian as long as 103.60-65 range is holding. As long as the pair did not close above it, it should be considered as a good sell opportunity. This divergence is a sign to be careful, as there is no real confirmation from the longer time frame weekly, which means Australian Canadian could go low and should go lower. Taking on next opportunities to trade, Aussie franc should make the stop soon. We have around 08250, 08270 area opportunity buy around the 200 moving average. We can see it's coming to very oversold, and a correction of 200-300 pips should be considered from this area. Also here we can see extreme divergence, right? So the last pips of the down move, breaking below this area should take the pair lower for the next support area, 091, but each of these supports should be considered as buy as long as they are involved with divergence. So look to buy possibly from the supports the Aussie franc. Aussie Kiwi, another interesting pair, just broke through the Bollinger Bands, could go easily and make the duplication, which means we can go for prices all the way for the previous support area around 125, 125.30 range. It should complete itself here, and the 4-hour divergence should complete itself around here, and a buy opportunity should be considered. Look to buy Aussie Kiwi from around 125. If it breaks the 125, then the next area to watch will be 124. That's this one. As we can see, there is a clear trend line holding this pair, right? Clear trend line holding this pair, and a stop around should happen, and we should get the next up move for this pair. About the indices, last word, it looks like the indices begin their stop. Still could go a little bit higher as we discussed, but we can see the flat of the MACD RSI becomes very already extreme. I think the 20 MA is necessary to be tested before any continuation up. So how to join it? For example, for Nasdaq, I believe that a break below the previous area or a break below the 2700 should be considered as a sell opportunity. 2450, the next area to watch. Breaking below will take us much lower again to 2580 at least. On long run, I still think that this line, of course, must be tested, but it's for longer run. For S&P, same opinion, just look for the break below the previous area. It's 1380, and once it happens, it should be considered a sell. It could still play around, it could still go for 1425, 1430 before making the move, but time to look for a sell. We can see that the volumes are getting lower. Again, also on weekly chart, time to look for sell. Retrace to the 20 MA at least of the weekly chart. Nasdaq, same story. Volumes are very, very low. Break below previous support, right? In this case, 13,000 should be considered as a down move for 12,715, right? And breaking below that should open the doors for the next area around 12,500. Well, that's the opportunities I believe will be on focus, on the center for this week. Look for them, friends, enjoy from them, and thank you very much for your time watching this video. See you in the live room, see you on the blog and Facebook. Thank you very much. Yours, Vladimir. Bye bye.